CEO, RBL Bank, Murali Ramakrishnan, MD and CEO, South Indian Bank, and Sunil Mehta, Chief Executive, Indian Banks Association.
Thank you very much, gentlemen, for being with us this morning. And it's going to be a very, very important discussion because we have today a banking environment which has changed completely, irrevocably. And the four gentlemen who are here with me today are best positioned to talk about not just the changes, but how banks are equipping themselves and taking on these challenges from a plethora of angles. And I'll just name some of them. There are the fintechs, which are coming in a big way, getting into the banking space, getting into the financial sector. There are the NBFCs, which are completely turning digital, almost turning into fintechs, and we have big examples of those coming in, which are giving a major run for the money for the banks. And then there are the banks themselves, which are, many of them have very smartly morphed into almost semi-fintechs and offering a plethora of services on digital. In fact, today the smartphone is your world. The smartphone is where most of, the people are conducting their transactions, banking. And then there is UPI, the big game changer, which is actually booming. And we've had a full discussion earlier in another summit on this, how UPI and ONDC and even now with the CBDC, there are this whole troika of factors which are coming in. So without much ado, I would, request each one of you, broadly, beginning with Mr. Kumar, to give us a broad overview, Mr. Kumar, on how you see the landscape changing. Now, you've been the head of the country's largest bank, and now you're in the middle of a lot of interesting developments at a fintech, at a leading fintech. So I would like to hear from you and then from the rest of the panelists on what is the changing landscape looking like for you.
Thank you, Saurav, and thank you, Business Today, for inviting me here. You rightly mentioned that the world today and our lives today, they all revolve around a smartphone. Whatever you want to do, mobile is the solution. And in such a changing scenario where technology is all prevalent, the question about the banks, what they are doing, the NBFCs, what they are doing, and the fintechs, what they are doing. So all three, many things they are doing which are similar, but not all things are common amongst them. And each one of them, they have a certain advantage. So if I were to summarize key or broad trends, one is about technology, which I have mentioned, but the regulation or regulatory aspect of it. So there was a time when regulatory arbitrage existed between banks, NBFCs and fintechs, but not the case anymore. So if you look at what Reserve Bank has done in the past, maybe 2 years, they have removed the regulatory arbitrage between NBFCs, banks and fintech. Fintechs, they don't directly regulate, but the guidelines which Reserve Bank issued in November this year on digital lending guidelines. So it is more or less that not being directly regulated, but you are working with regulated entities and they are accountable to RBI. So indirectly, you are also accountable to RBI. Then how do different entities compete and what are their competitive advantages? So banks, obviously no one can beat when it comes to trust factor, it is very high. Their capability to gather liabilities is unmatched. NBFCs and fintech don't have that advantage. When it comes to NBFCs, they have done a wonderful job in terms of providing credit to that segment which otherwise legacy banks don't find it lendable. So that is their advantage, and the flexibility in terms of their HR policies, recruitment policies, last mile connectivities, that is NBFCs, but it was largely a physical infrastructure. Fintechs, they can't gather liabilities. They don't have a license to lend. But as I said, that they are playing a very critical role again in providing the last mile connectivity and through digital, not physical. And that is the key differentiator as far as fintechs are concerned. And what a bank would do to acquire a customer in terms of cost, the fintech will do probably at 25-30% of the cost. So in terms of cost arbitrage, fintechs are today best placed as compared to NBFCs and the legacy banks. And the advantage in terms of meeting the customer needs. Why they are flourishing? They are flourishing because I think the legacy institutions could not sense what the customer needs. There was a gap, and which fintechs have very beautifully filled in. So the landscape which I see today in India, our country is so huge and is still developing. So there is a room for every player, everyone. They are not exactly competitors to each other, but there is a huge scope for collaboration between all three.
Murli, I'll come to you. Essentially, all the big banks and even the smaller ones, the faster growing ones, the mid-sized ones, are investing in digital capabilities, like for the very same reasons which Mr. Kumar just mentioned, that you don't have, the option anymore because everything is now going digital, and you have capabilities which are absolutely essential. How do you view this change, and do you think the mid-size and the smaller banks are equipped, are investing enough to take on these challenges?
Excellent question. Let me start by saying that I think the changes which you're witnessing today is actually the need of the hour, because if you look at the increasing demography, we are actually talking about customers who are in the age group of, let's say, 25 to 40, who are pretty much used to doing everything in digital way. So today, whether one likes it or not, I think what the customers would want is everything to be done at their convenience. Therefore, I see technology change and all this the paradigm shift which is happening in banking space or in the financial services space is, I think it's a right paradigm shift which is happening, because that's the one which is going to help serve the customers. When it comes to these changes, how a bank like ours, for example, view it, we are probably considered to be the biggest amongst the small banks, let me put it that way, because our asset size is still about 1,40,000 crores plus. When we look at it, we actually look at it as a boon, because this is best way to sort of bridge the gap between a small bank and a big bank, because today technology is available to all of us, tools are available to all of us, the fintechs and the NBFCs and small banks which are working with large banks, that opportunity is available for all of us. So we are actually seeing it as an opportunity, because with technology we can actually bridge the gap between a small and a large bank today. Actually, this we are seeing it very much in the market space today, because when we go and bid for a large, for example, facility with a large corporate today, you find you are competing with the best in the industry today. Alongside, you are competing with SBIs or HDFCs of the world, primarily because you have technology today to bridge the gap. So I see this as a great opportunity to shift bridge the gap between the two. This is one point. Second thing which I would want to say is, today the biggest advantage for a brick and mortar office or for a large bank is the scale. And the scale comes from the distribution channel, which is basically spread across the country for a large bank, which probably may not be there for a small bank. But today with digital coming in, it's not a constraint anymore. Today, sitting in Kerala or sitting in Chennai, I can pretty much access any customer anywhere in the country. And if I can offer convenience and product suite which is comparable to the best in the industry, I don't necessarily have to have a brick and mortar. Today, thanks to technology, whether it's collections, whether it is analytics, whether it is underwriting, whether it is sourcing, whether it is marketing, everything is today available digitally, and if you are clued onto it, you can pretty much leverage any of these capabilities. So you don't have to necessarily do it yourself. Today you have everybody available with you. So if you look at the entire paradigm shift as an opportunity in partnerships, then the whole country is available for you to market. Therefore, I see this as a big change and a good change for bridging the gap between the so-called advantages of being a large bank to the disadvantages of being a small bank.
Mr. Subramani Kumar, actually Murli mentions a very important point of technology being able to then allow the mid-size and the smaller players to leapfrog into the same league almost in terms of accessing the customer. As a bank which has started off as a community bank and then morphed into this fast-growing, digitally savvy, investor-friendly bank and customer-friendly bank at RBL, what is your sense of how, do you really think that it's going to be easy for an RBL, for instance, with all its capabilities on digital, to take on an HDFC bank or an ICICI bank or an Axis Bank? What is your sense?
Well, just coming to it, I'm just reminded of a very simple adage when the mobile world was expanding. Duniya mutti mein, right? They really brought the facts to the fact that everything. Now today, the world is, the bank mutti mein is not the appropriate word. Banking apa haath mein. That is exactly the precise formula in which today the world is moving. It's not the question of size which matters today. It is the question of your agility and your ability to penetrate the space which is vast, wide and deeper. That's number one. The second, what differentiates today's consumer and that of the yesteryear consumer is their influence of the e-commerce. The ease and the convenience of doing an e-commerce transaction. Can it be replicated here is a challenge this side of the table. The expectation from the consumer and the client is that why it can't be. It again makes me to the simple analogy of another book the banks have written, Banks 2.0, 3.0. They say, do we need a bank?
Correct.
Or do we need a banking? So when you wanted to do the banking, to what extent you will be able to adapt technology is the today's, your ability to do the banking, be it anywhere in the world as Murali and Mr. Rajneesh was talking about, that's going to be the big differentiator. Second, you have to necessarily look at the today's demographic divide of the country. Forget about 9 years or 10 years. You talk about the Gen Z they call. The one who are definitely fueling today's disruptive technology for adoption wherever it is. This Gen Z, which is around 27% of the country, and you have a Gen X, which is again around 20 plus. Then you always have the people who just fit into the Gen X, the earlier who are just less than 54, the baby boomers of our age. All of them, there is a common thread which moves around is that if I can do a thing easier, convenient, most important fact today is that, do I have a cashback and rewards? What is there in for me to do this transaction? Why the payment space is extremely penetrated with all this disruptive technology is that you have ease, convenience, and you are having a cashback, and you are having a rewards. These are three facts which has penetrated into the payment. Whether it has been extended to the other part of it, the statistics prove that it isn't. Because the most important thread which is missing in that fintech and the banking world is a trust factor. Today the trust factor comes from the two facts. Do I see a building? Still 90%, one of the surveys I just read recently, which said 90% of the people whom they surveyed, and it's a very large pool of the survey, they still believe that my preferred or a primary bank or a primary financial institution, which they call the PFR, has to be the one which is going to give me a security of my data. This is a differentiator between what is the today's world of the fintech and the banking. Do I have an ability to get the trust? The trust comes from what is the negative, is there any negative news about it? These two are to be vetted, so they go to the traditional banker. So the today's world, the banks of like, we wanted to make the best of both worlds. How do we do that? You have to go to the model of a partnership. The question of me imitating and duplicating what is the efforts already done and then gone into it is not the right way of doing it. We are a regulated entity and we are we are bound to be a regulated entity. The fintechs are not able to, as Mr. Kumar very rightly said, you will not be able to expand your footprint unless otherwise you are able to bridge the gap of two factors of the data security and the trust factor. Since you are regulated, the best part is tie-up, partnership, and exchange the views of your trust and your ability to store the data securely and with their agility and the ability to deliver at the end. If you are able to meet the consumer expectations and consumer service to the proper customer journey, the tie-up will be able to be successful. That is something which we have added to and which we are working on.
So bank mutti mein is a very dangerous thing. Banking mutti mein is what you're suggesting, clearly. That's what I'm saying. So, Sunil, at IBA, for instance, what are you telling your members? How are they across the board? Because you have a very wide membership. Across the board, how are you witnessing that the trends in terms of their digital journeys? Because each one's journey will be different in terms of scale and size.
Yes, it's a very pertinent question. As a banking body, we deliberate on these issues. And the payment space is already digitalized and we are all pretty well aware of it. The next era is for digitization of the lending products and lending solutions. And I think every bank is now working on it, starting from the personal loans and unsecured loans, and then going forward. The solutions for mortgage loans may also work out because there is an ecosystem where this documentation can be done online and end-to-end journey of a lending product can happen online. So that opportunities are available. But as an industry, we are also looking for that this jam trinity has provided a lot of leverage, the way what Mr. Kumar was also saying, Subramanian was also telling, mobile mutti mein, so banking mutti mein, so jam, Jandhan, Aadhaar and this mobile trinity has really brought banking into the mutti mein. So that is there. But this has now developing certain concerns also. The concerns in the area, because a lot of people are adopted the technology, but they are not fully aware about the cyber security threats that are available, the type of frauds that is happening. And for a banking industry, as very rightly said by Mr. Kumar, that trust is the most important thing. So if the trust is lost by tomorrow, you have a digital banking and you lose your money through a fraud, it gives a wrong lesson to the consumer and to the lot of people who are associated with that consumer. So the very important aspect of working is, like, besides penetration of a digital banking, there need to be an important element of creating a consumer cyber awareness to prevent the cyber fraud. Then there is a very important need to prevent the mis-selling, because the Data Privacy Act now, the data misuse is very rampant and a lot of institutions are going for a cross-selling and mis-selling without giving the adequate information. So the banking sector need to create certain enablers where the interest of the consumer in terms of trust is protected, so that they know that yes, if I'm dealing with an entity, my data privacy will be there, and there will not be any mis-selling, and there will need to be a governance issues to be created around it. So as a banking community, the potential for adopting the digitalization in lending space is the vast opportunity, but as a you need a break with the escalator. So that break in terms of ethics, in terms of cyber security, cyber awareness, and mis-selling and all these things need to be covered. So these are the important agenda for the banking industry right now.
Ms. Kumar, I'll come to you again and I'll request you to wear your hat as a former public sector banker for a while. Tell us about, the core banking solution, CBS. That is at the core of all banks' activities, right? Now, when, Mr. Subramanian Kumar talked about e-commerce, we're talking about UPI, but the whole gamut of activities which are now digital for a bank must be putting enormous pressure on the CBS of banks. Now, how do you think banks are adapting to that, and what are the changes? How much of activity is probably moving away from CBS, and banks are beginning to do that, by the way. Even large banks are moving some activities away from CBS to ease the load on that as the number of transactions really rocket. So what's your sense on that?
Yeah, no, very relevant and very good question about like core banking. So when core banking was designed, there was no mobile banking.
Right.
It came later. And it is a back-end system. And it cannot handle the kind of data which is now being generated, and the multiple channels of delivery. So apart from branch banking, there is internet banking, mobile banking, and business correspondent, what you call customer service points. Or these are the channels which are being used. And there is an explosion also in the number of customers. Jan Dhan accounts alone, 45 crore customers were brought into the banking fold. So this is a big challenge for all the banks. And currently the system, the way it operates is that between the core banking and all these applications, there is an intermediate layer which has been built by the banks, which is an application layer. APIs are exposed, but in terms of the architecture which banks have adopted, it is not a very efficient architecture. So now the move is toward what they call in technical parlance is hollow the core. And the core banking will just be an accounting software. And there are like different banks, depending upon what they get advised by the IT companies or the consultants. But the concept of containerization or microservices, these are the new buzzwords which are being talked about. So when you take a project of this size and imagine a State Bank of India, which has 47, 48 crore customers and crores of transactions happen. So it has to be handled with lot of care, because slight misstep and it can do a lot of damage to this system. But I think all banks, I'm presuming, that they are moving in the direction where the core banking would remain only for accounting, and there will be supplementary systems and all that, which will handle the other functions, including the mobile banking. And currently, the mobile banking is also designed depending upon the capability of the core. But now, it will have to be a reverse engineering, where you first design the front-end application which meets the need of the customer. So customer is in the focus. You provide a design on your mobile which is suitable for the mobile any customer journey, keeping the customer convenience in mind, and then work backwards. But there are solutions available, and for newer banks, this will not be a challenge. But legacy banks like SBI or HDFC or ICICI, they all will face or are facing this challenge. But we have now like the bankers who are in action. I'm a banker out of action. They may be able to throw more light on this.
No, absolutely. I think Murli and Mr. Subramania Kumar can throw some light on this whole important aspect of front end being looked at first. Because of the reasons you just mentioned in terms of the pressure of transactions, and then how the core banking solutions can be modified, upgraded. Also, and stuff being moved out and hollowing the core, like Mr. Kumar mentioned. How are both of you? I'll put it first to Murli.
Yeah, I think it's a valid question, and how we are tackling this is that. The core of today banking is all about convenience of the customer. As we talked about, the target segment of all the banks today are younger population and people who are in the age group of, let's say, 25 to 40, who prefer convenience. Therefore, today, with the way you are now partnering with your various people in the ecosystem, the front end which is actually provided for acquiring the customers, that has to come with ease and come with user-friendly system, so that you are providing the best available convenience to the customer, and customer can seamlessly get through into your system. And today, thanks to many of the platforms available today, for example, if you take even product like supply chain financing or products like retail, all kinds of retail products, today you have not today, I mean, I'm talking about even for the last 2 decades, we have had platforms available where you can seamlessly carry out the entire loan cycle process in a seamless fashion digitally.
Yes.
Today, with the digital coming in, it's made even more simpler, because today your BRE, I mean, through your analytics, you can come out with the models which are available for credit underwriting, and through a business rule engine, you can actually seamlessly integrate with the platform. And every process in the loan cycle can today be accessed by people, which to 2 decades back we used to do it manually.
Correct.
Today it's completely replaced with the system, the file moving in seamlessly from one end to the other. Today, with the solutions available in collection, solutions available in customer service, solutions available in cross-selling, today the whole platform can be extended far more to get into the life cycle of the customer. Today, one of the things which I think almost all the banks are now specializing in is not just looking at credit income alone. It's a non-credit income, non-interest income which is actually playing a bigger role. Therefore, all this actually makes the entire thing very convenient. What actually is the challenge is when banks progress in their evolution, there are many legacy systems which keeps coming. How do you actually make use of the data which is residing in various legacy systems? How do you make that available for what you want to do today for analytics? That is where the big challenge is. I think thanks to the technology companies who are also focusing financial services a big sector for their growth, you more often than not, you find solutions coming from them who come and work with the bank. They pilot it with the bank, and they also sort of improve their systems.
And analytics is so critical, because in a competitive environment, if you do not bank on analytics and data for the same for the customer's wallet, you don't progress.
And today, if you look at analytics, it has extended not just in in products alone. It has been extended to all kinds of customer journey, right from even predictive analytics, where you can look at whether a customer needs to be called for recovering your money or just a reminder sent through a text message is enough. All these actually can be culled out through the intelligence available today. And today, thanks to technology, all these things can be made available in one place. So it's made far more easier for bankers as well as for the customers. But the key thing is what our panelists said in terms of data security, which is extremely critical. And you need to have a clear firewall so that you don't misuse any of this. Not only you, the vendors with who you work with, and vendor who they are providing, who they are working with. I think you need to ensure that all of them actually adhere to the standards which are there.
We'll of course come to cybersecurity in a bit. That's so critical. Mr. Subramanian Kumar, your thoughts on this easing the core?
I'll just put it up. Now we are moving towards the stripped down versions of the core banking. Today, the core banking is not the yesterday core banking where it is the central fulcrum of every activity which is going down. That's where your technology ability comes down. You have to differentiate between the ledger posting. Today, the core banking is to be a ledger keeper. The yesterday, your Lala Ka Dukaan, if you look back, there is a ledger keeper at the back of the office. It doesn't interfere with the transaction which is happening in the front office. You strip down the operations, the one which requires a KYC of the customer, which doesn't have nothing to do with them. I'm just giving an example for the KYC. Strip it out and put it somewhere else.
Maybe the cloud? Are you using the cloud?
Yeah, cloud is one of the ways of storing it. On-prem or cloud, it depends on your budget and your costing and your efficiency to handle it. Of course, the cloud comes with its own costing as well as its own challenges.
There is the whole issue of private cloud versus public cloud.
Exactly. We can put it anywhere else. I'm just coming to the core point of that. Stripping down those things which are not going to do a transactional, going to change the ledger. Those things are to be de-stripped, virtualized elsewhere as a common thread to put the pressure, to take the pressure off the core banking. That's the way the world is moving towards. Second important thing is that today's world, everybody talks about billion transactions, the UPI and things like that. It is nothing but a movement of data from one position to another position. How the data is going to hit my core is the decision for keeping it within the core for payment solution or outside the core for payment solution. Everybody is moving towards the payment is the biggest challenge today. Should I spend high cost for doing a transaction or a relatively lower cost for doing the transaction? I take the payment gateway outside. I just put a payment bridge outside, which is going to handle a pass-through transaction differently and the transaction changing the ledger differently. It is going to bring the pressure down. So this is exactly. Then the user experience. Previously it used to be the common layer across the system. Take out the UI and UX experience out of it, put it elsewhere. The customer journey, the only one part which is going to change his balance in the ledger is going to hit the core.
Right.
So if you just draw the journey in two perspectives, number one, how it is going to optimize my services which we are offering it, making the end consumer to feel comfort. Single touch FD, double touch payment, or three touch loan. So that will open, every touch will take you to the different segment of the layers without impacting the core banking. So the one layer of the entire consumer journey hits the core banking. The exterior core banking, exterior capacity will be able to sustain for a longer period without cutting your budget. That's the way I look at it in my point.
That's probably the way the banks are going to go. At IBA, Sunil, do you see this whole modernizing of core and, sort of relieving the pressure taking place among your members?
No, actually banking industry, right now the core is the inner strength, but most of the core is being now utilized by the APIs. The APIs are basically plug and play model on the core. So the load on the entire data, that rests outside the core, it doesn't rest on the core. That's why the core is able to take load and take so much diversification. With the advancement in technology and working the banking and also looking after the adoption of the clouds for storage and that of the data, I think that will facilitate the system and providing more APIs to be working on the core and enhancing the capacities of the core. So this is not going to be a challenge right now because that can be built upon because the technical solutions are already available for it.
Mr. Kumar, now I would request you to wear your fintech hat. You have you were associated with one of the most big spread fintechs when you created at SBI the YONO app, the super app in that sense. Tell us a little bit about your journey creating the YONO app and how you sort of are using those learnings in your current avatar.
Yeah, so YONO was, of course, like from State Bank of India, building YONO, it was a very exciting experience. And the first decision was that normally the practice in the banking is that पीछे देखो, आगे बढ़ो. In pure Hindi. That is how the system operates. So first break when we decided to go for YONO was that पीछे नहीं देखो. It will be fresh. Fresh design skills, fresh this thing. Of course, the purpose was that bank wanted to attract younger generation to its. So it was like the image of State Bank was that it's not tech savvy, despite having all the technologies, but that was a perception. Right or wrong, I'm not going to that debate, but that was the perception about the State Bank, and millennials don't do banking with the State Bank. So that was the problem statement. And how it started was that we wanted to first build an online marketplace, which will attract the younger generation. But during the course of discussions, and then it was decided that we will rewrite the whole customer journeys, end-to-end digitization across channels. That was a massive project which was conceived. Initially, there were some reservations also that whether we are biting more than what we can chew, but ultimately bank decided that that's the only way forward, that we bring into fresh design thinking and which is totally customer oriented and which has no connection with the past.
Was it conceptualized as a sort of a financial superstore, super app kind of?
Yes. So as I said, that it started with online marketplace, but then decided to bring the mainstream banking into it, and as well as cross-sell products from SBI stable, insurance, travel, card. So if you look at today, it is the real financial superstore, one of its kind, where not only all the banking journeys, but all the insurance needs, mutual fund, investments, credit card, everything is at one place. And then the added attraction of online marketplace, which is the biggest hook. When the data was analyzed, most of the customers, they were spending a lot of time on the online marketplace, which has been integrated. And the design principles were also that end-to-end customer journey. And starting from, like, I'll just give you one example, and then I know that you're kidding. So the idea was that if it is, say, home loan, so it is not necessarily a home loan. Home loan everybody offers. Where do you get the competitive advantage? So it was that bank has multiple thousands of properties which are approved by the bank. So a customer would start his search from there, identify the property. He has the assurance that it is a SBI approved project or property, so chances of fraud are much less. And you start from that point till the end when the loan is disbursed, and then you have the cross-sell of home insurance, life insurance, and online marketplace to furnish your home, buy your kitchen. So that is what the concept around was built. End-to-end customer journey is fully digitized, and the experience, whether it is on internet banking or mobile banking or at the branch, identical. And just to give you an example, that savings bank, it used to take 45 minutes to set up a savings bank account. Now it takes 6 to 7 minutes. Gold loan, 1 hour. Now 10 minutes. Cash, we did the innovation where we said that we don't need a card. Cashless transactions on ATM. So the biggest difference between the approach which bank adopted in YONO and from the past was that first time we put the customer convenience and what he needs at the design, at the core of the design. Everything was from customer's point of view. It is not that this is the product I am offering, take it or leave it. No. This was that what will make your life convenient. So that was the underlying principle, and it is today the largest digital bank in the world, across the globe. Nobody else has been able to bring out a product like YONO nowhere in the world.
That's really great. The same question, I mean, we'll come back to the whole point about, each one servicing a separate segment, though everybody is going digital in the financial sector, like you mentioned at the beginning. Fintechs and banks, the more than competition, do you see collaboration between the two sides? And I will ask the other two bankers on the panel also the same question.
Yeah, so in my opening remarks, I mentioned that it's not competition. How does a fintech compete with a bank? No question. Because in payment business in particular, fintech is beyond payment and beyond credit. Yes. They do many things in cyber security, fraud prevention, risk management. So fintech is a very wider term, but what generally we associate with this payment and credit because it impacts us the most. But talking specifically about like a company like what BharatBi does, which is in payment and facilitates lending. So in payment there is no money. The structure is such today in the country that other than MDR on credit card, you don't make any money. You handle millions of transactions, but you get nothing out of it. So in such a scenario, and if the money you have to make out of lending efforts, then necessarily you have to calibrate with either the NBFCs or the banks. So it is not a competition. As I said, that no regulatory arbitrage, cost arbitrage is there, and capability, agility, and to be ahead of the curve in terms of adoption of technology. Their fintechs are ahead. Even if banks are thinking any project, they will take 6-8 months to implement. Fintech can implement it in 15 days or 1 month. There are reasons for that. It's not that banks don't want to do it, but there are certain challenges in terms of size and the systems of approval and all. So I think it will be a scenario where everybody has created a certain strength. You play on that strength and complement each other. So fintechs, NBFCs and banks, they complement each other and play on your strength. And banks bring, as I said, trust, liability. NBFCs doing last mile very well at a lower cost. Fintechs doing the same thing, using technology and a much lower cost. So that is how you differentiate. But absolutely, it is all collaboration.
I'm afraid we are running out of time. So I will end this session by asking all of you, in the next 5 years, how much of change in terms of digital do you see the Indian banking space? And I'll start with Murli and then go to the rest of the panel.
No, as I'm talking, 93% of our transactions happen digitally. So it's already very close to 100. So in 5 years' time, absolutely no doubt that everything will happen digitally.
Mr. Subramanian Kumar, yours.
We are moving not 5 years. I assume that it will be less than 2 years. We will be moving towards a digitized banking, which we already touched it. Then we will be achieving something called digital journey banking, where the people would like to do what is at the back end. As a consumer, I'm not concerned that whether my data is you secure it, whichever the security do it. I want the transaction to be concluded in X minutes or Y minutes. The success of the front enders is a partnership between them. That depends on how I am able to successful in making them to come repeatedly. That's where the margin gets cleared. If I'm successful in repeatedly making them to come back, if they are able to reach it, then the digital journey which has been placed is moving towards the success.
Sunil, at IBA, will digital issues, cyber security, etc., top your agenda as we move along?
Yes, it's on the top of the agenda, and 5 years from now, we can very well foresee, because India still has got a lot of rural and semi-urban areas where the outreach and issues are there. So a large section of the banking will definitely be virtual. The percentages will go up substantially. But 5 years from now, I could see that the brick and mortar plus the virtual banking model will continue and contribute, because it provides some comfort to the people at the tier 3, tier 4 cities and the rural areas to get connected with the brick and mortar system. So digitalization is the way forward, but both will coexist.
And the ultimate would be when you can, using metaverse, create virtual branches, and when you interact, you feel like that you are in a branch. So that would be whether it will happen in 5 years or 10 years, we have to see. But that should be the vision.
But banking mutti mein, not banks, and banking mutti mein is the way forward. Wonderful panel and excellent discussion. Thank you very much, gentlemen. Big hand. Thank you.
All right, we're going to just take a very quick break for lunch. We'll be back here to continue the sessions right after that at 2:30. Look forward